let's go on to the next part of the basic master map, imbalance. So the market needs to be efficient. So when you have an imbalance, which is basically like so, I'll just draw it for you guys very quickly. So let's say we're having some down candles like this, and then suddenly we have something like this, right? Well, our imbalance is from here. Let me show you. It's from here to here. And I'm sure a lot of you trade this or some form of this, and it can be used very well with supply and demand to get potential mitigation zones, which we'll also cover in a little bit. So let's go over
and before maybe, again, this is very important to understand also why this is the case, right? So you learned earlier that Enigma delivers the market on all technically 24/7 or 24/5, depending on what markets you look at. And obviously Forex 24/5. And of course, at some point, there's a lot of liquidity entering the market, and that leads to this quote unquote inefficiencies where the market cannot be delivered properly. So that's why, again, that's where now the key comes in, and I'm pretty sure most of you guys know that, as Cam drew perfectly, right? So imbalance is when these wicks or the price never revisited these areas and only delivered it once, but it always has to be delivered twice to fairly deliver it, right? Because of course, the market has to be in balance at some points. So when there's these gaps, right, there's a lot of different concepts about that, but the just truth is the market has to be fairly delivered and has to come back at some point. So if it leaves these gaps in here, at some point, again, can be immediately, can be later, but market needs to come back at some point and fill these gaps. Then it's considered fairly delivered, and then it can continue on, right? Of course, these imbalances doesn't need to be filled right away. Again, they can sitting there for quite a while, but at some point the market will come back and fill these imbalances. And with understanding of that, again, why did we dig into that? Because we now can go a step further and already can kind of refine these supply and demand areas with a little trick with these imbalances once more. Okay, but slowly but surely, again, that's why this literally everything which we show you is building upon each other. So it will be a very nice and scheduled, clean structure of how to do it. Okay. Okay, if you want to go to the next slide.
Of course. So here we go. This is the explanation. So these imbalances are also known as inefficiencies. Like Reem said, the market always needs to be fairly delivered, and that's why they come back to these zones to fill the imbalance or make the market efficient. There are areas which not all orders were delivered in the order books, and obviously I'm sure a lot of you use imbalances combined with supply and demand to get these tight stops resulting in high RR. So let's show some examples of these. Nice and simple. We've got our demand zone with our imbalance. The imbalance gets filled.
And again, maybe we should touch upon this quick. If this is something you never heard before and is confusing you right now, and you're like, what the hell is an imbalance? Again, then best thing to do is actually do some Googling and stuff like that, because that is such a basic scenario. Same thing as supply and demand. We will not waste too much time to explain you exactly like how an imbalance looks like and stuff, because that again is considered very basic understanding, and we will not waste our and your time and digging too much into it. But again, we just show it you here of how we can use it in combination already to make the best out of that, right?
Yeah, exactly. So again, as you can see, it's pretty much a very similar scenario each time. You've got your supply or demand, in this case demand. We have an imbalance, price fills the imbalance whilst coming into the supply or demand, and then continues. And I'm sure, again, like we said, a lot of you probably already use this to some form. So we're just going to cover it very briefly rather than sticking on it too much. So here we have our supply zone, we have our imbalance. As you can see, price pushed away, left this imbalance, price came back up, fully filled this imbalance, and then continued in the intended direction. Here, same again, imbalance, price comes back, fills that within the demand zone overall, and then after it comes back, it continues in the intended direction. Let's go over some more. Same, imbalance gets filled, continues in the intended direction. Same as this one here, and as you can see, again, we'll get into these obviously, but I don't want to rush in too much. We're just wanting to make sure everyone's at the same point, because obviously not all of you will have traded some form of smart money or anything like that. But as you can see, we create our zone, we push away, we leave our imbalance, price come back, fills the imbalance, and then again, same as always, goes in the intended
if
direction.
You go maybe back again to cover it maybe for the ones who have not heard about it. Again, it's always when you need 3 candles for that. That's technically it, right? Again, you see here, this candle, this wick does not connect with this wick, right? And of course, this in here is the imbalance. And as you can see, comes back, fills this imbalance, right? Perfect. And then continues low. If you check all the wicks all the time, it's always connected. And you see here, leaves a gap. What does it do? Comes back, fills this gap, right? And obviously continues lower. Same thing here as Cam showed. Here, right? Leaves the imbalance, push lower, fills the imbalance, comes back, right? And of course, even here, for example, now this is where market left a gap still, right? You see, this is the wick, right? But the next fill is only here, right? So you technically still have overall this gap left, right? But again, if you look, all in here, everything is properly delivered, but delivered. Even here, perfect, delivered. Here, for example, you have mini imbalances left, right? And here, for example, mini imbalances left until this point. It was like here, right? But guess what? Comes back again, fills that. Same thing here. So you always have to be patient about these imbalances where they are. But as you already can see, if you just look at this randomly and look for imbalances, you're getting smoked all over again, right? So that's why he's saying we don't want to bore you too much of what these imbalances are. But again, just to cover very briefly again what an imbalance looks like. And again, already saw, you just combine it if it's some sort of supply and demand area. Then again, as we saw in here, this is some sort of supply and demand area in here. Then we leave the imbalance. Then it becomes interesting because it should tap back into. Again, if you just look randomly at the supply in these imbalance areas without being supply demand, it really doesn't really work out that much. And that's why we don't focus on it specifically, but just to show you briefly of what this is, because it of course can and will become later a little bit more important if you refine it a little bit more. Right?
Yep, exactly. And like Reem said, we're not going to be using even supply and demand. We don't just use that on its own. There's loads of confluences that we're about to get into. So let's continue. So again, what do we have? Boom, imbalance from like here to here, comes back up, fills it, and then again, this zone here pushes away. We leave this imbalance and we fill that again, and then we reverse down in this direction. Just a couple more examples to go over. So as you can see, we've got our supply zone, price pushes away, this imbalance gets filled, and then we've also got this imbalance which gets filled over here, and then this imbalance which gets filled here, and this lines up with the supply and demand zone, and then price continues in the intended direction. Same again over here. This is our supply zone, price pushes away, we've got this imbalance, and then we've also got this imbalance up here that lines up with our supply zone. Price comes in, taps into the imbalance, continues lower. Just got a few more examples. So again, price pushes away, leaves an imbalance, we come up, we fill that imbalance into the supply zone before continuing. And also notice how all of these imbalances here get filled. And then here, obviously, we do leave a little one, but the most part, they all get filled, and we are trading a efficient market. So again, Last one, what do we have? Same as always, we've got our demand zone, which leaves this clean imbalance. We even build some kind of liquidity. We'll go over that later as well. Price fills the imbalance, comes into the demand, and then obviously continues, or in this case, it's likely a reversal upwards.